So globally, I think the biggest trend lately has been the deflationary pressures that we've seen coming from demographic trends and also from the end of the commodity super cycle. So commodity prices have come off fairly heavily. The way that central banks have tried to deal with that over the last few years has been quantitative easing and negative interest rates. And that's what they've tried to do with that is force up asset prices, create a wealth effect, and try and get people spending again. The side effect of that is that the currencies typically devalue when the central banks are involved in QE, and that effectively exports deflationary pressures somewhere else. So we see particularly Japan and Europe are still heavily involved in QE, fighting to get their currencies down. And that kind of plays out in terms of multinational corporates' earnings. We see a lot of volatility in international earnings coming as the currencies fluctuate. The other things we've seen in earnings on the equity side is that top-line earnings have started to flatline. We're not seeing much growth coming from there anymore, and we're starting to see some wage pressure coming through as employment trends improve. So we'll be watching fairly closely for earnings pressure from that. In the fixed income side, sovereign bonds are reasonably unattractively priced. QE has forced those to fairly unattractive levels. On the credit side, though, you've seen the pressure in particularly oil and commodity companies push through to higher yields. And we'll be watching that closely. They're reasonably attractively priced, but if we see more pressure in the commodity space, those could become systemic. And then the last place that we've seen of interest is China, where they're fairly effectively rebalancing their economy. But where it's been fairly disastrous is in the financial markets, where they haven't managed to gain the trust of investors by sort of intervening unexpectedly and creating issues there. So the big things we'll be looking for this year is earnings pressure coming particularly from wage growth, commodity prices and how those impact the credit space, and then whether the Chinese government can regain trust from the investor community globally.